Solana, the comeback king, leaving the bears in despair after claiming the chain was dead at around $8 back in 2022. Since then, Solana has skyrocketed over 3,000% in one of crypto's most hated rallies to hit a new all-time high of $295. But the question is, how much more room has Solana left to grow in 2025? Well, it could just be getting started. So in this video, I'm going to be breaking down why Solana could be one of the best risk-adjusted cryptos to buy in 2025 for a potential 4 to 5x return. And stick around to the end of the video for Solana's bull and bear cases as well. I'll break down some numbers a bit more. By the way, I own Solana, full portfolio disclosures as always in the YouTube description. Pinned comment over on X, you'll see current holdings, OTC deals, venture rounds, all that stuff, plus the risk statements. Investing in crypto is risky. You can lose all your money. Past performance not equal future performance. Don't invest more than you can afford to lose. Okay, so Solana's growth is not about speculation, structural. The network has fought its way to an absolutely dominant position in the cryptocurrency market by capitalizing on speed, cost efficiency, and developer-friendly infrastructure. I mean, the average transaction fee is 1/10 of a penny. How can you not love that? This kind of efficiency gives Solana a major advantage when it comes to attracting decentralized applications, DeFi platforms, developers. So here's why Solana is ready for another rally in 2025 and its market share could explode. Okay? Solana currently owns 15% of the smart contract platform market cap, with projections to reach 22% by the end of 2025. AI and meme coins, in case you haven't noticed, have absolutely exploded on the network. In fact, most of the AI stuff's happening over on Solana these days. The network has become the go-to place for meme coins, for AI agent coins, AI agent frameworks, even some gaming stuff in DeFi, both of which are skyrocketing in trading activity and valuations due to the successful nature of the Pump.Fun launchpad, which is not always that much fun. A lot of people lose a lot of money over on Pump.Fun, but it has democratized the launching of tokens. Solana's low fees and high speed have made it a very attractive option for launching new AI-driven applications. But it's not just about hype. Developer activity is also experiencing explosive growth. In 2024 alone, over 7,600 new developers joined the Solana network, outpacing Ethereum's growth to become the fastest growing developer ecosystem. That alone is a very hard metric to fade. More builders means more applications, means more transactions, means more value, means more demand for Solana, more demand for Solana DeFi products. And round and round you go. Revenue's also exploded. Solana's app revenue jumped to 213% in Q4 of last year, driven by trading activity, the continued expansion of DeFi, and increased validator revenue. Solana has also proven its ability to overcome its past challenges, like the network going offline every few months, and capitalize on its strengths in 2025. Despite, of course, facing those network outages before, despite the massive VC hype of last cycle, the centralization concerns, its entanglements with FTX and the fear around that unwinding, Solana has proven its resilience and it continues to improve with major upgrades coming. Multi-chain Capital even went so far as to say Solana is the leading chain to power internet capital markets. Solana as a technology can outperform the major traditional finance players, including the New York Stock Exchange, the NASDAQ, the CME, JP Morgan, Goldman frickin' Sachs, and Morgan Stanley on the financial markets side, and Visa and MasterCard on the payment side. Crazy stuff. Simply put, Solana is firing on all cylinders and executing on all fronts, all whilst Ethereum is currently in freaking crisis mode. The price has been pathetic, realistically, this cycle. The narrative unclear. The biggest innovation on Ethereum has been liquid staking layer 2s, which are largely parasitic. Now, before we break down the numbers behind Solana and why it is not the blockchain to fade in 2025, I want to introduce today's sponsor, iTrustCapital. With iTrustCapital, you can wrap your crypto trading in a retirement account and make as many trades as you want without ever hitting a taxable event, which is insane. They have all the top coins from Solana to newer coins like Sui and old classics like Bitcoin and Dogecoin. They're open 365, 24/7. They have low fees, and they even allow for in-kind withdrawals and let you buy real deal gold and silver via their partnership with Kitco, which is a great way to diversify out some of your winnings. To learn more and to find out if iTrust can help you with your tax situation and help you save big, check out the link down below where you can sign up. You'll even get a $100 sign-up bonus exclusively by using that link. Thank you very much for supporting our sponsors. Now back to it. So Solana's fundamentals are rock solid too, and the numbers don't lie. Solana has surpassed Ethereum on most major on-chain metrics like trading volumes, daily active addresses, total economic value, deep in payments, and a lot of other stuff. I feel like there's actually still a mispricing between Ethereum and Solana in the current market considering the actual on-chain metrics. But let's take a look under the hood here. Solana now accounts for 45% of all decentralized exchange volumes, surpassing Ethereum and Ethereum's #1 layer 2 base combined in daily trading activity. Combined. That's nuts. Solana's total value locked is now the second largest by chain, hitting around $9 billion, an increase that puts it ahead of all competitors except for Ethereum, which just has the first mover advantage, a bunch of old whale money on there. Now, Messari has also reported the liquid staking rates on Solana, which is the percentage of liquid staked SOL, has increased by 33% quarter on quarter to 11.2%. Solana-based liquid staking protocol Sanctum now has over 100 different liquid staking tokens. Messari has reported that Solana's chain GDP, which is its total application revenue, hit $840 million in Q4, up 213% from Q3. Now, obviously, trading platforms like Pump.Fun have captured a big amount of that, but we also see stuff like Radium, which has had triple-digit revenue growth and massive price appreciation for the token. November was the largest month, by the way, bringing in $367 million in revenue to applications on the protocol. Now, if Solana's MEV structure shifts to a model similar to Ethereum, where validators actually capture around 80% of the annualized revenue, then we could see it double from 3.4 to $6.8 billion. Now, this shift would actually make Solana's network even more profitable for validators, especially considering its already low transaction fees and its super fast speeds, making it, of course, a much more attractive platform for validators to put their time and energy into, for developers to put their time and energy into, and of course for users at the end of the day, because you can do everything on Solana without having to bridge any of that BS that you have to do.
I'm going to go from Base over to ZK Sync, over to Linea, back to the Ethereum main chain, pay $1,000 in gas fees. They're
crap. Look, this growth potential is one of the key factors contributing to optimism around Solana's future. And by the way, I still own Ethereum, okay? I like to clown on my ETH bags, but I own Solana too. The addition of FireDancer, Solana's new third-party validator client software, is also a game changer, and its mainnet is expected to launch this year. Now, FireDancer's validator upgrade is the final missing piece that could eliminate Solana's historical network instability, while also increasing throughput and decentralization, which would alleviate some of the common criticisms against Solana around its rather centralized validator model. Now, according to Dune Analytics, validator revenue could also increase by 56% with the optimizations provided by FireDancer. This would give Solana, again, a significant edge over other blockchains. The launch of FireDancer, along with MEV optimizations, is expected to create a much more robust and scalable blockchain network that could unlock even greater potential for Solana in 2025. I mean, 1 million transactions per second with FireDance, man, that's crazy stuff. Now it's time for Solana's bull-bear case. Okay, now the bull case, of course, is driven by institutional adoption of Solana, from major funds to potential ETF narratives. I mean, if we get a Solana ETF, which we're very likely to get a Solana ETF, billions of dollars can flow into Solana. We have meme coins, we have AI, we have real world assets, we have DePIN, all this stuff happening over on Solana, as well as the planned tech efficiencies around FireDancer and validators and stuff like that. A lot of stuff's going on. Now, these could push the price of Solana to VanEck's $520 price target in 2025. That's around 2.5x from where Solana is today. Not bad. Not bad. So it's not the biggest return in the world, but given its late stages of the bull market, it's not a bad return from a relatively low risk, quote unquote, blue chip cryptocurrency, and a much better return than you're likely to get from the stock market, of course. Of course, if this cycle gives us the gift of a major blow off top, then it has the potential to blow all price predictions out of the water. And we've talked before about the potential for $1,000 Solana in this cycle. That's if Bitcoin goes to $250,000. No 250K Bitcoin, no $1,000 Solana. But if you get 250K BTC, watch out for $1,000 SOL. But let's also talk about the bear case for Solana to keep our feet firmly on the ground, okay? Solana has suffered from many outages before, so if FireDance and other upgrades don't fully solve these issues, Sentiment, of course, could take a hit in that scenario. Competitors are always hungry and on the heels. You have Sui and Aptos and a lot of others out there. The SEC still has yet to clarify Solana's status, but if it is deemed a security, bad news bears, and it could create hurdles for institutional adoption in the USA. But I don't think that's going to be such an issue, to be honest. President Trump literally launched his meme coin on Solana. We have a new SEC, new CFTC, new OCC, new Treasury. Solana's going to be fine. Solana's not a security, okay? But, some people are still worried about that. It hasn't been definitively decided yet. Okay, the SEC, in theory, though, should be much more favorable to the cryptocurrency industry, in particular to tokens like Solana, which is almost certain to get an ETF. However, with the market currently, suffering from a bit of a case of casino burnout, people are also questioning about Solana's growth potential. Maybe we've placed an over-reliance on this intense casino-like speculation in the meme coin and AI agent industry, and that speculation, after enough people have been burned enough times, can fade away. Again, we have competition from all the other chains as well, which would love to be in Solana's shoes, and they're coming for Solana. Now, long-term, I've speculated you're going to have 3 to 5 blockchains that capture 90% of the users and transactions. Solana is probably going to be one of them. Maybe Sui or Aptos will be one of the other ones. But we'll see. The fat lady has not sung yet, so there's still a lot of time for positioning here. Solana also has some big unlocks coming up, which will not be super significant from a market cap perspective, around $2 billion for a $100 billion plus market cap asset, but still could cause some FUD and add to sell pressure in an already weak market. Ideally, you'd want a big unlock like that when markets are booming, not when markets are already struggling sentiment and price-wise. So keep that short-term risk in mind before running into a position. Okay, that's it. Let me know your thoughts on Solana as well down below. Thanks for watching.